This is Justin Pulitzer. This is my weekend review for the week ending October 19th, 2014. And this is being recorded on Saturday, so I don't have the benefit of seeing the futures before recording, but I will discuss what's been happening in the market and what is likely and probable to happen going forward. So let's start off with the SPY, the S&P 500 ETF. And you can see we had been in this consolidation mode here, had a false breakout, and then a subsequent breakdown that was begrudging at first, but then has gotten very steep in the last few days. There's been a lot of fear over this Ebola crisis and about Russia and some various other less important geopolitical risks, but also going, contributing to this witch's brew for a decline that, frankly, has kind of been a long time coming. So let's take a look at what's transpired. You had a breakdown in the market, and then we kind of caught ourselves here, but have been trapped below this descending trend line. We kind of broke up here a little bit over it, and then we broke down below it. But as you can see, this has really been the predominant trend that's prevented price from going higher. And we had these double bottoms, and then this complete breakdown, free fall, which I had discussed would happen if we took out these lows. And we're now sort of in a bit of a retracement of some of that decline. But if you take a look, it stopped on I had a longer term trend line drawn. This goes back for, let's see, even longer than that. This is really a secondary trend line. Let's see, 5 years daily, does it show? Yeah, from this low where we really took off from the lows of the last bear market, and we've kind of been riding this trend. This is the predominant from the quote-unquote generational low, and that trend is obviously much lower, but we held this one from the bear market. So that's a good thing in this picture here. But the question is will we hold it if we test it again? The answer is it's a little uncertain. So we bounced back up really to where this breakdown point was. This was really the breakout zone. If you take a look at this compression of price, we powered up through it, kind of retested it here, came back up, and then came down. And what I had been discussing was possibly this setting up for another bounce here to form a head and shoulders, or maybe we would come back up and make a new high, but we didn't hold, and we broke down below it. So this, to me, is much more bearish price action than we've seen in recent history. It's good that it ran stops, but we really need to get back above it here to get bullish again. So we did hold that trend. On Friday, we extended that rally, but what did we do? Where did we stall? We stalled really just, I'm sorry, I have some of my alerts on here, so I know it's mucking up the chart a bit. But if you take a look, we came really just back into this breakdown zone, the 38.2% fib retracement of this decline, and we stopped ahead of the 200 MA, which was a really important, obviously, is one of the most important moving averages. So, and we closed a little bit with a bit of a doji, not a really strong close for a rally. So what I'm really looking for is to see if we roll over here, if we break below this, to see if these lows here hold. This here was again with some excess, and we closed decently, although I had said on this day in the midweek update that the body here closed below these lows, and that to me wasn't as bullish. Here we tried to rally again, and the body closed even below there. But finally on Friday we got some relief, and we came back up here. So this is going to be really critical. I think if we can get above Friday's high, we'll retest the 200 MA and possibly even retest this past support, which would coincide with the 50% Fibonacci retracement. And I'd be looking for that to be a bit of a mechanical short, just to see if we can get some rollover. And If not, it's a write or write out trade, because we'll probably, if we can get pushed through there, we may come back up to retest the declining 200 MA. On the other side, if we do wind up coming back down, if you take a look, we really couldn't get back up over this bar. Like, if you take a look, these highs are basically about equal. It's actually a little bit shy of it, which is, to me, a little bit more for the bearish case. And if we lose this low of this bar, I think we're going to come back down at the very least and maybe retest this low. It's pretty far away. I mean, we closed on Friday at 188, and the low of this bar is 181. So that's going to be a pretty that probably cause a lot of panic if we came back down to retest that. I don't know if that holds again. We may wind up coming lower. I had discussed in the midweek update that this period of time most reminds me of the debt ceiling fiasco that took place. And if we did a measured move of that, which was about, I think, 580 points in the S&P and the SPX, that would really bring the market down to 172.15. So if this breaks, I could see this being a bit of a cascade lower. And that would be the, I guess, the equivalent. I think at that point, you'd have to take a look at the support. We stopped at this support, like I had said, which coincided with this trend. And if we lose that, really the next reference low is really kind of down there. It's in the 173s. So maybe we don't get the full move, the same thing. Maybe we just come back to retest these lows. So these reference lows here are what really is important now. If those are lost, then these start coming into play. So let's keep an eye on that next week to see which way we go. I think if we get up over the Friday high, like I said, I think we're going to retest these lows in here, which was the breakdown, and also the 200 MA. That's also a mechanical write or write out short. I probably would be more interested, though, in these levels here. I definitely would be interested in a tester size here, but I think you can go in size up here for write or write out, and for a bit of a rollover. If we did wind up getting through there, then I'd be looking for a test of this predominant downtrend line and somewhere in the 61.8 fib. But I think that, like I said, it's really on the bulls to prove that they can do it. Some more weakness that I've been seeing is, and I've been discussing this a little bit on the stream. I had meant to discuss this in my midweek update, and I'm going to kind of start with the QQQ and then get into the SOX, which are the semiconductors, which are really, really important. I don't think they get enough attention by traders on the stream, but I am watching them, and I think the market is keying off of a lot of that as well. It's a big weighting in the NASDAQ. So if you take a look here of where we came down into like this just shy of the 61.8 fib in the Qs, and we rallied up and we stopped really again. If you take a look where we stopped here, it was right at this breakdown level. So to me, that was very normal that we didn't. It kind of got there and backed off a bit. The question is now the same question as in SPY. Can we get up through that? This Friday, if we can get back up over this level, I think we have some room a little bit higher to retest, into here where this prior breakdown took place. If not, we're gonna probably roll back over and test a little bit lower, probably into this chop zone, and maybe really even come a hell of a lot lower. This has been the canary in the coal mine for me, and this was sort of a bit of a tone change in my mind of the market. I had been, talking about that there hadn't been really a trend change at the time, but oops, we went a little bit too far. But this really did it for me. We had a bit of a professional gap. If you take a look in this semiconductor index, it's been in this steady uptrend for quite some time, and it's held this trend to the T. And you can see we had a bit of a similar situation here with a bit of a slightly higher high. We're right at support, and then you had this break of trend, and it was a gap and go. This is a professional gap. I've been talking a lot about that to the upside, just because the market's been in an uptrend, but it's also just as relevant on the downside. And you can see what happened here. We came down, and we've just kind of been sputtering around. And then Friday we kind of tried to break into the gap to test, but we closed well below this high. To me, the high and the low of this day's bar are really, really key. The high is 581.75. Let's actually set some price levels here. This is 581.75. Above that bar to me is shows a little bit of relief for the bulls. And if that happens, I think we can play for a since we did test into there, I think if we got back over there, we probably would wind up rallying back up to this breakdown point and maybe trying to kiss the backside of the prior uptrend line. This to me would be an absolute point to short, and see where that goes. It's a really great mechanical right or right out type of a play. And I think that there would probably be a bit of some rollover once if this gap could get filled. I don't necessarily know that it is going to get filled. Oh, let me set the alert for this too. On the downside, the 556.45, anywhere below there is bearish to me because it's below the dump bar low. You can see we did test below here, came back up. Tested below again with a lower low, came back up, and here we started to make higher lows and higher highs. So this to me is a little bit of a mixed picture. It makes sense that we would come back up here and roll over. Maybe we come back here mid-range, but the key to me really is this day. This is very, very bearish price action, and in general, just because in the context of this gap. And if the bulls can't repair this and really break back up over this downtrend line, I think the market as a whole has got some issues. Some of the things to look at that really are going to matter here are some of the really big NASDAQ stocks. I'm coming out of turn a little bit here. I had sort of been, I had a bit of a different plan, but I think that since we're talking NASDAQ, it's really relevant to discuss some of the leaders in this arena. And Google, to me, is one of them. We all know on Friday they had a bit of it. They reported their earnings, and it was a disappointment, and the stock went lower. We're gonna have to see how this shakes out with Google, because it's coming from a lower high. As you can see, Google had topped out a while ago back up here at 615. And we've been trying to break up higher. I had really thought we were going to make a run for the highs here. You could see we're making some higher lows, then some higher highs, and then we backed off here with some equal lows and then lower lows, and then just completely fell apart. I think a lot of this has to do with the breakdown in commodities, and Google has been is a big dollar stock, and it's been a spot of relative complacency, as you can see, for a while here. And I think funds were just selling it to raise money to meet margin calls. For me, what's really key here, the key level for Google, the must hold, is this 511 area. You basically had a double bottom here. This was a slightly higher low. I had actually been talking about 515 on the stream. I guess I was wrong. Maybe I get confused with Google and Google. It's just these guys have made a complete mess with the symbol change. But disregard the 515. The 511 level is really what's key. This double bottom low is the key. And I think we could make a long trade here. There's a little bit of give. You could come down here. There's a bit of a trend line that goes to 500. Maybe you wash some people out here, and 500 is like a big level that might attract some buyers. So somewhere between 511 and 500 has got to hold. If Google loses that level, I would say the NASDAQ is probably in for some trouble. Although the one caveat with that will be Apple, which I'll discuss in a minute. Let me delete these price levels. They're not really important anymore after they reported. These are my real charts that I use, so that's why they're sometimes a little bit cloudy. I try to make them as clean as possible for you guys, but I do use them. Maybe I'll set up another account to do these videos in the future. But you can see we came down here. We lost this hammer low. We made now a lower low and closed below these hammers. So to me, Google's price action is pretty bearish. I think there will be some type of a play for a bounce up, because Google, when it came into earnings, had already been down a lot. And I think a lot of people were very nervous after Netflix reported, And that was part of the reason why Google had some weakness going into the print. So it's a lot harder to get lower out of this type of a pattern when you've come down a lot already. So I think that there might be some seller exhaustion, and I'll be looking for a long somewhere between this 500 and 511 for a right or right out bounce play. Just look for a reversal bar to play long against. The best thing to me would be is if Google came down here and made some type of a like a bottoming tail hammer, and then you could shoot against that low. That's what I'm going to be looking for. I had been playing Google. I had discussed it being worth a short on Friday, and I never really took any heat on it. Couple of points, and it rolled over, and it wound up being a good day trade. So let's look for next week to see if this 511 holds. If it does, we'll play for a long trade back up. I'll probably do it with some type of a spread or ratio trade. I'll play around with that and discuss it on the stream. Let's get back into index world. IWM was, again, this has been the poster child for weakness in this market, and it's really let it lower. You can see we took out these double bottom lows, broke down, and then we started having some relative strength the last few sessions. But Friday, this wound up being the again with the weakness, and while the rest of the market was up, IWM was really closing lower. You can see we came back down and we closed right around here. So for me, Friday's bar is important. Maybe IWM comes back and retests these lows. I think that would be really bearish to happen so fast, although it's probably better to get it done with early if it's going to come there and break, or if it's going to come there and hold. I had discussed a 38.2 fib as the point where it would stop. We got up there. We got a smidge above it. If you look from this time frame, from this high, that 38.2 is here. So I had been thinking that somewhere between this 108.99, let's just call it 109 for argument's sake, and this 110.20, we'll call it 110. I thought up into here would be a really big challenge, considering you had these lows for IWM to get over the first shot. So we'll see. If you could get over this high, I think we do come back up into there. And then, you have these lows again to contend with. So we'll see what happens. Here, the 20 MA, I guess, and the fib, this fib from this high wound up being too much. I would really love to see IWM have a bit more of a rally, shake out some of the weak hands that are playing it short as their hedges against their longs, and for it to really kind of come back up into the 61.8 fib, and also the backside of the prior uptrend that it had broken. And I guess you have a 50 MA here too. I guess that'll probably be somewhere in here. And then play this as like a much better entry for a more of a rollover trade in IWM. But let's keep an eye on it. Maybe it did blow its brains out and it can't get back up here. It needs to continue to make higher lows, in my opinion, to stay bullish. And if we do have a break of these lows, I think we could probably play that short again. For a little bit move lower to the oh, I already have it here. Oops, I can't get this to delete now. To this to the magic number of 100, which was also some congestion range. If you go back a little bit further, I have to go back even further than that. Let's see, 3 years. Yeah. You can see over here, this was the next congestion area for IWM. So I would think if we lose these lows, you can play it short for a rollback to 100, and it would have lost this trend, and that to me would be even more bearish, where it stopped and it lost, and maybe it does want to come back down and retest the really predominant trend eventually, which would be down really at the 50% fib from the big run, and also the really more dominant trend. I think if that happens, this market is going to have been really washed out by then. So let's see what happens with that. I don't want to get ahead of myself. This is talking way too far in advance, although with the way this market trades, we could maybe even be there in a couple of days. But I definitely think that this congestion area would probably be some support, at least in the near term. So that would be where I'd be looking to cover on a break here. So maybe play for those 3 points. Something encouraging for the bulls is the TLT, which I think maybe blew its brains out here the other day. You had this this precipitous rise in the TLT, and then you had this bit of a this is the opposite of a professional gap. This is a retail gap. This was just people getting squeezed who had been playing short in the bonds. These are the same geniuses that were playing long oil and had been betting for lower rates. They got blown out. I mean, look at this thing. Just the range size. This is Treasury bonds. This isn't. You'd think this was some kind of biotech stock, right? This isn't the Yelp chart, guys. This is TLT here. So I mean, you had a range with a high of 127 and a low of 121. The next day, you see we made a lower high. I had said that I didn't think it would be that easy, that we would test into this candle. We did. We opened up at the high and then just dumped. Closed below the low of this bar, which is bearish. And then here we had a bit of a doji. It would not surprise me to see this kind of try to limp its way back up if the market has relative weakness. But I would say this high is pretty secure, at least for now. And I think that TLT probably has seen the highs for a little while. Which is, I guess, good for bulls, but we will see. As I was saying, Apple reports. Wow, this is. I don't know how I got. Oh, I didn't shorten my time frame. Let's go in for 9 months. All right. So Apple. This is good actually. This shows the gap from the last earnings, the consolidation, and these moves. And Apple, as I had discussed, has been in this channel upward for a while. You can see I have the measured moves here. I had discussed this in a prior chart. You could see I have my alerts set here for price triggers. But Apple had been in this up channel, and I had mentioned it the other day, and it has been making lower highs. Here was looking a little bit encouraging. This had been really relative strength, but I guess the general weakness of the market was too much for Apple, and it's lost this channel. And you can see we held the 100 MA here, we lost it here, and then Friday we kind of came back up and tried to break into the channel. I actually rolled some short puts down and out that I had been in Apple. I still have a small position in the stock. I had really been out of most of it up here when I had discussed the top being in the 103s, which it wound up being. And then I had been discussing lower highs, and I had opportunistically said that this here was a long play. It came up, it did what I wanted it to do. I had taken some profits, but I still have a little bit of it on. It kind of dumped, and I've just been kind of playing a little bit of wait and see with it. Earnings are going to be really important with this because I had showed you guys the relative weakness in the NASDAQ and the I'm sorry, in SOX, in the semiconductor index, which is a big part of NASDAQ, and I already showed you Google has broken down. So Apple is really, really important. It's the biggest weighted part of the Qs besides Google, and if you have both Apple and Google weak, it does not portend well for this market. Apple really needs to get itself back up over this 99.15, which was this, I guess, hammer bar. And if it can do that, I think the earnings would probably elevate the stock to get some Momo going. The expected market maker move for Apple is $3.80, and for the end of the week is $4.61. So just keep that in mind when playing Apple. Those are the relevant levels. But this to me is looking a little bit cautious here because we couldn't break into the channel. Earnings are going to matter. They're Monday, I believe, after the bell. Let me just take a look over here. Yeah, the 20th. So it is Monday. So that's going to be key. Let's see what happens with Apple. I think that's going to be really, really important for the NASDAQ. And I think if Apple is good, it probably can help buoy the NASDAQ a little bit. Some other stocks that you guys know I follow are Facebook. I had discussed a little bit of caution in the midweek video with Facebook. I had said that it had closed well here, but I did not like that we had been holding the 50 MA here to the tick, and then here we had a bit of a violation of it. It reversed price, but this to me, this was a lower low than the prior bar, and this to me was caution, and you can see what happened. We stopped right at, and now we formed a downtrend line, and the stock completely dumped into the supports though. We actually violated it a little bit into the 100 MA, into these old highs, and then Friday we rallied pretty strongly. And I had discussed getting out here at the 50 MA. I wouldn't say get out, but at least taking some profits if you had bought down here, which I had discussed being buys on these trends. I did. I actually sold some puts. IV has been high, and I wound up just taking some of them off on this rally up, just because we were back to the 50 MA, to the downtrend line, and really to the meat of where this you could see where this decline, where this breakdown took place. So often price will break down and then retest that breakdown. And I was just being, a little bit cautious with the stock, just because you have a little bit of overhead supply here, a 20 MA and this 50. So, and you had a strong sell into strength, right? So for me, that's going to be key. If Facebook can get back up over this downtrend, and get back into the rising wedge, which it had been in before. We had tested below it on a couple of occasions, but then we're holding it with closes. Once we lost that wedge, I was getting a little bit more concerned about the stock. If we can get back up over this this big dump bar here, which was 76.50, I think the stock is probably back to being a little bit more healthy. The top of this gap from the earnings was 76.74. I really want to see the stock over there. That, to me, over there is a little bit safer, and then really above this range, which I have just been discussing, the 78.06. So these are the levels. Facebook really needs to get back over these levels for me to start really thinking it's got its run to 80. We got really close here. You probably had a few people kind of jumping the gun to sell, and they did, and then the stock has been weak. So let's see if we can get back up over this level. If we can, then I'm going to think that Facebook, again, is the bastion of relative strength. Twitter has been a little bit the same thing. It had been holding up really well. It had a bit of a breakdown. It's still holding levels. Again, I'm not changing my tune on this. 48 is a key level. That was the over the gap from the earnings breakout. 40, anything over 40 is bullish. Over 50 is more bullish, and over 52 is still more bullish. But really, over 53.64 really puts the a move back in play for a move to some of these bigger fib levels of the 61.8, of the 57s, and the, let's just call this 59, really. So let's see what happens. It was a little bit relatively weak on Friday. Again, I'm in caution mode. I think you can be a buyer on the as long as it holds this trend line and 48, but cautious. If we start losing 48 here, you see we kind of tried here. It was testing below. There were buyers. If we lose that, I'm going to be a little bit less bullish on Twitter. So really critical areas here for the stock to hold. I already showed you Google. Netflix was a disaster this week. I had been asked on the stream what I thought about Netflix. I had said I thought it was really a bit of a coin toss, but was leaning that it was a little bit more bearish because we were coming from a lower high, and we've kind of been kind of waning here. And the stock was supposed to have like a 30 in the $30s range. It wound up having over $100 move. The stock came down. It did get bought up. We had discussed playing it long. I played it long. I got out a little bit early on that, but still bagged a lot of points on that. Friday looked like it was going to kind of go to hell in a handbasket. It was selling off in the face of a market rally. Mark Cuban stepped in, though, and this stock kind of caught itself. So I think the play with Netflix is that it probably does wind up working its way lower, although it may be a long trade for a little bit more retrace into the for some of these fibs. But you need to see it get clear the dump bar is high. If we can get over 377.17, I think you could play it long for a right or right out trade, and maybe see this 38.2 fib and maybe even the halfback. Which would be 386. So let's keep our eye on that. Netflix, really cautious. I would not play this long for an investment, although I do think you can play it day traded for a swing. I'm going to fit one more in there. Priceline has also been relatively weak. I think that this had an inside move on their earnings, and then since then it's just dumped. I had been talking about playing it long at this 1087, although the market was coming down too hard for me to step in, and it broke. We've now retested that area, and it was resistance. I would say Priceline is probably looking a little bit more bearish. I think this thing is going to be under pressure because of Ebola fears. But we'll see. I think that I'd be looking now to be playing Priceline maybe short if it gets back up to this dominant trend line. That's a right out trade. Maybe it coincides with the 20 MA, which would be even better. But Priceline to me is looking a little bit more bearish. It's got earnings coming up. I'd be a little cautious with that, but just because this thing has come down quite a bit. If they have something good to say on the earnings, maybe it does have a bit of a rally back even higher. This thing can move in swaths, so just be careful. Anyway, that's the weekend update. Please like the video if you found it helpful, and be sure to follow me on Twitter. My handle is @JustinPulitzer, and just send me any comments or questions you might have, and I'd be happy to answer. So have a great rest of your weekend, although you'll be seeing this video on Sunday, so there won't be that much, and let's have a great trading week. Cheers.